Hello and welcome to the September 2018 episode of Lunch with a Lawyer. Today we're going to talk about some steps that you can take that I've seen people take in an effort to avoid filing bankruptcy or just to deal with a bad short-term or long-term financial situation that really have the potential of making things worse or much worse. And those are payday loans, car title loans, and pension loans. And I'm going to mention a fourth type of loan just as a bonus for joining in a little bit. But I see these people make these mistakes and I really wish they wouldn't. So let's talk about them. The first one is a payday loan. Now, if you've got bad credit and you may have had an unexpected expense come up that's not in the budget, you're living paycheck to paycheck, or your cash flow is screwed up and you have a short-term problem. You need basically an advance on your pay, which is really what a payday loan is. It's just an advancement on your paycheck, as I said. You borrow money now and then you pay it back when you get your paycheck. But really not a good idea. I've seen many people take out these payday loans and just regret it later. They end up not being able to pay it and getting sued. And I've looked at these over the years, and wow, I thought credit card interest rates were bad. These payday loans, way out of hand, and you have to be careful with them. And in my opinion, they're really not a good idea as a solution to any financial problem that you have. And in getting ready for this show, I Googled payday loans in New Jersey just to see what would come up. And I'd recommend you do the same thing. And what I found is there are some companies that do offer it. But you know what? Try as I might, I had a great deal of difficulty finding anything on what their interest rates are. They'll have FAQ pages. Well, don't you think that one of the frequently asked questions or FAQs would be, what are your interest rates? But in the FAQ pages I saw, it isn't there. And for good reason. I did run across one payday loan provider, and they actually, when you go onto their page, they want to know where you are, what state you're in. And interestingly enough, if you select New Jersey or Pennsylvania, they'll say, sorry, can't help you. Well, maybe that has something to do with the fact that in New Jersey, if you charge an interest rate of 30% or more, that's criminal usury, loan sharking. All right? So they know they can't charge these rates here in New Jersey, so they back off. But I said, okay, let's see where they charge in other states. So I selected Maine, and Maine came up. And you know what? They did talk about interest rates on their page. Got to hand it to them. At least they were upfront about it. But these interest rates ranged anywhere from as low as 78% to over 600% as an annual percentage rate. I mean, that's just insane. And these are the ones that, and I didn't see it in an FAQ. I didn't see it up front anywhere. I had to scroll all the way down to the bottom of the web page and click on rates and terms because I figured it's got to be in here somewhere. Well, they had it, and it depended on how much you were borrowing, how long you wanted to pay it back, things like that. But those interest rates got real high real quick. But what you got to do is, and where the trap is on these is it may look, because it's such a short-term loan. All right, if you get paid every 2 weeks and you say, all right, I'm going to borrow this, I'm going to pay it back in a week or so when my next paycheck comes in, then whatever interest rate in terms of dollars, you'll be charged this amount of interest. They do it in terms of dollars, not in terms of interest rates. You got to look carefully. But that's for a very short-term loan, a week or two. But what if you look at it from a longer period of time? And you got to do this because a lot of times you continue to get jammed up. because now you get your paycheck and you not only have the other bills you got to pay with that paycheck, but you got to pay back this loan with interest. And a lot of times you need more time, so it gets extended, and you end up paying more interest rates and more interest. Okay, and that's how it mounts up. So you got to look at it in terms of an annual percentage rate, not the percentage of the balance right now. Okay, so how much? It'll say, well, let's say it was. Well, I think one of them even said it was $5 for every 100 borrowed, or 50. Excuse me, it's $15 for every $100 borrowed. All right, 15%. That's kind of a high interest rate, but that's 15% a week. All right. So what is that per year? That's where they get you, and that's where you have to be very careful, is looking at it from the terms of an annual percentage rate. So that's what you got to look into. And as it's not just the interest rates, as I said before, money's tight. That's why you got the loan in the first place. And now you've got to pay it back. Once your paycheck comes in, you got other bills to pay. You can't maybe able to pay it with interest, so you can further down the road, and that builds it up. As you get another loan to tide you over, and then this gets into a vicious cycle. More and more interest is owed, and the balance gets bigger and bigger. So you need to be careful about that. So there are some other options, though. So if you're thinking about a payment, think about this. Say your car payment is due, and the due date is 7 days before your next paycheck, a week. Well, what's the late charge on that loan? Okay, and consider which is cheaper, just paying the late charge, or all the interest that you'd end up paying on that payday loan. So look at it. What's the worst going to happen if you're late making that payment? Okay, and how much would you have to pay? What's the economic impact as compared to the interest you would have to pay and the risk that you're taking on with these high interest short-term loans? You might want to negotiate payment plans with your creditors. Maybe you can get things a little differently at better rates. It's possible as an alternative. You maybe schedule your bills so that they're due instead of right before your paychecks arrive, maybe right after your paychecks arrive. Or maybe the due date on your credit card to be the middle of the month, so that you're not trying to pay the rent and the credit card at the same time. So you can readjust your cash flow, so you don't need these types of bridge loans between paychecks. Those are payday loans. And believe it or not, I have content on my website. I talk about how bad these payday loans are, and yet still people see these articles and they'll call me to say, thinking I'm a payday loan company, and I'm not. I really recommend against it. So that's payday loans. Now let's talk about car title loans. Well, a lot of the problems are the same. Okay, you got to watch the interest rates. Look on the websites. Do they even talk about the interest rates? Do they even tell you? When you look into it, be very careful. What is your annual percentage rate? Not how much interest on the loan per month, but what is the annual interest rate? Okay, on your car. And what's worse about these in a way are even worse than the payday loans, because if you don't pay the payday loan and you run late and the interest racks up, and of course the balance can balloon on you, and then they end up suing you. But if you get a car title loan and you don't pay, and ultimately they repossess your car. Now they have your car. Now you can't get to work. Now you're in risk of losing your job and that paycheck and your ability to pay your debts. So these car title loans are a whole other kind of dangerous and risky, in addition to the interest rates and how they can accumulate and how the balance can balloon out of control. So, like I said, you look into these, ask lots of questions about the interest rate, get the interest rate as an annual percentage rate, and be sure to deal with a company in New Jersey. I'm not, and again, I just want to reiterate that I'm really not in favor of these types of loans, but that's not to say there aren't some outfits out there that offer them that are reputable, okay? I'm not trying to tar everybody with the same brush, but it is very risky and you have to be very careful with them. So make sure you get something in New Jersey where they're regulated and subject to New Jersey's laws, and at least you might pay 29% interest, but it's better than 100, 150, 200% interest, some of these really high interest rates on these title loans. And you at least have the protections of New Jersey law. Then the third is pension loans. I see a lot of people take out pension loans before they come to see me for bankruptcy. I'll be looking at their pay stubs and I'll see that pension loan deduction, and I understand nobody wants to file bankruptcy, and you do whatever you can to try to avoid doing that. But a pension loan is a bad idea for several reasons, and not the reasons that I mentioned for a payday loan or a car title loan. The interest rates are usually pretty reasonable. I mean, there's nothing really wrong with it from that perspective. But there are other problems with it, and you need to consider. They can rob you of growth. I mean, you're mortgaging your retirement, really, to try and solve a short-term problem. You take that money out, and even if you pay it back, okay, that money is not sitting in your pension fund growing, okay, with a nice rate of return and continuing to grow. You're losing the growth of that money over the period of the loan to an extent. And that is a problem. That can make you might delay your retirement because you can't afford to do it because you don't have enough money yet because you took out that pension loan. So you're mortgaging the future. Plus, really, and one of the tragedies of it is that you file bankruptcy. If that money's in a 401k or an IRA or things like that, at least in New Jersey, creditors can't get to it. Okay, you can't levy on a pension, you can't garnish, you can't levy on an IRA. There are certain restrictions, and I mean, I'm speaking very generally here, but for the most part, when you take a pension loan, you're taking money out of a vehicle or a place where creditors can't reach it, and then turning it over to creditors. Okay, rather to keep it safe away from creditors, growing for your retirement. That makes more sense, doesn't it? So that's part of it. But a lot of times, and there can be tax consequences as well. So let's say you borrow the money, but you can't afford to pay it back. All right, well then it counts as a distribution and all sorts of tax consequences that you end up paying, which would most likely in the short term not be dischargeable in bankruptcy. So you need, there's a problem there with taking out the tax consequences of it. Again, making the situation worse. If you do it, continue to make contributions to your pension. Okay. A lot of times, well, I'm paying back this pension loan. I can't afford to be contributing to my pension at the same time. Well, that just makes matters even worse, because not only is the money you took out not growing over the period of time of the loan, but you're not contributing more money during that period of time. You're losing the opportunity on growth of the money you would have ordinarily contributed into the pension that can be growing towards your retirement. So if you just have to take a pension loan, do it and make sure you're making your maximum contribution to your pension while you're paying back the loan to minimize the impact on the limited growth. And as you're repaying the loan, obviously that is a contribution back, and it's dripping back in, and as each payment is made, it's growing over the life of the loan as you continue to make payments, but there's still a loss of growth. And I would seriously recommend talking to a financial planner or a financial retirement expert on this subject before taking a pension loan to see what the impact could be on your retirement planning, so that you don't lose too much or put off your retirement any longer than you have to. So really do that. And if really you're taking out to pay back debt, also at least talk to a bankruptcy attorney. If you have a significant amount of credit card debt, medical bills, and you're trying to take out your pension to pay it, and you should at least, before you take out the pension loan, talk to a bankruptcy attorney. You may be in a situation where bankruptcy is the best solution for you. You then discharge your debt, and then keep the money in your pension growing towards retirement. So you get rid of the debt without sacrificing your retirement, your future. So talk to a bankruptcy attorney. If you still don't want to file bankruptcy, at least talk to a financial planner to make sure that the impact of your pension loan is no worse than it has to be. So those are the three main loans I wanted to talk about. So here's the bonus content that I promised, and that is a tax refund anticipation loan. Now, I'm talking about this in September. This isn't tax season. You're not looking to get it, but I'm hoping to plant that seed in your mind so that when tax time comes around, you don't make this mistake, because a lot of people make it. And I have friends that they're accountants, they're tax preparers and things like that, and even they recommend against getting a refund anticipation loan. And here's why. Look, it doesn't take that long for the IRS to get you your refund. Okay? If you once you file your tax return, now they have up to 45 days to pay you that refund before they have to start paying interest on it. But that 45 days usually runs from either if you filed it on time, like if you filed it in March, the 45 days usually runs from April 15th from the return date. If you file your return on or after April 15th, the IRS has an administrative time to, as I said, typically 45 days to process your return without paying interest on your refund. And this is right from the IRS site. And if they pay you interest, the interest on the refund will start on the return due date, which is generally April 15th. Might be later if you got an extension. It's or on the return due date, the late filed return received date, or the date the payment was made, whichever is the latest. So you might have joined us. You might have filed your tax return late, and then it'll run from that period of time. Usually the tax refund is paid in 1 or 2 weeks, and usually that's no longer than 21 days, 3 weeks. And this is from the TurboTax site. Hey Pete, how you doing? Thanks for joining. If you have any questions, please be sure to post a comment. So you can even check your tax refund status on the IRS website. I'll leave a link in the comments you can click to and check how we doing. When can I expect it? And obviously, get your return filed and then get your. But how badly do you need the money, really? Okay. Is it just the instant gratification of it, or do you really need the money to pay bills and things like that? Because the interest on those, again, can be high, and that eats into your refund, because you'll get that loan, and then when you get your refund, you pay them back, of course, with whatever accumulated interest. So you can be hurting yourself and getting less money. So consider that too. You really, with a refund anticipation loan, are getting less than your actual refund because you had to pay them back the interest. So really consider that along with everything else, and ask yourself seriously, do you really need this money? So that's it for this month's episode of Lunch with a Lawyer. Hope you found this content interesting and informative. I do Lunch with a Lawyer every month on the second Thursday of the month at 12:30. Last month I had to delay it because I was away, but it usually is the second Thursday of the month. And on a different topic. We have many more general interest topics that we do. and it gives an opportunity for people to ask a question in a live context. If you like this video, please click that thumbs up like button. If you loved it, hit that heart button and love it. And even better, if you think someone else might benefit from this information, click the share button. Share it with one of your friends. Just share it on your page, okay? And let them know. If you want to share it directly, or maybe you just want to be a little discreet about the share and not post it on their wall or tag them, you can share it in Messenger as well. So that's always a good option. So spread the news, spread the information. I want to help out as many people as I can. And in general, and again, I'm a lawyer, got to have disclaimers. I do this for informational purposes. I was talking recently about reverse mortgages, and I said, please don't go out and take out a reverse mortgage based on what I told you in this video. Consider it carefully, talk to a mortgage professional. Here, look into it carefully, talk to a financial planner, talk to a loan officer. Look into your options, your specific situation. Please do not make any decisions in your financial life based on what is in this video or any other video that I post. It is my hope that by having this information, by having this knowledge, you're better able to ask the right questions when it comes time to look into what's best for you and have a more guided investigation. So I'm not giving legal advice here. None of you are my clients. But I urge you to talk to a professional for more specific advice. Now, this video will also be shared in the next week or so on my YouTube channel at richardsonlawoffices.tv. You can also share that link or favorite it. Take a look at it. If you're watching this on YouTube and you like it, please click that thumbs up button, and I encourage you to share it as well. And also, if you are enjoying not only this episode, but in general the content of the channel, I urge you to subscribe. Just click that subscribe button, that blue R button, to subscribe and get lots of content I post regularly every month. So that's it for Lunch with a Lawyer. I'll see you next month.